we go. Okay, so we have futures down 0.9%. S&P futures down 0.9. We have NASDAQ futures down 1.38. Dow futures down 0.57. Russell futures down 1.23. VIX is up into the 20s again. Let's open up some fresh charts here. Okay. Mags, pretty healthy correction down below the 50-day moving average. Let's take a look at the SPY. For opening up at the 50-day moving average, we'll see how important it is to hold it. Last Friday, it held. If we're testing it today, we'll see what price action gives us for the day. Yesterday's market map, heat map, was not super encouraging. Everything was pretty red. I should be able to go to FinViz. 75% of stocks declining yesterday. So pretty nasty. Broader market selling off, large cap, doesn't matter. Everything was down yesterday. I think China, or maybe it was India. I posted this in Telegram. I just did like a top-down snapshot. We had oil up 0.29%, China up 0.56. It was a gap up at a red candle on China. It still was positive on the day. So I'll start throwing these in end of day. But the advanced decline line 21.475.6. Just kind of get a pulse out there. So 666 at the open, looking about 0.9 to 1% lower. We'll crunch our numbers. We'll do our math. I'm probably going to sell some premium today for Project Options Edge using the April lows. See how much premium I can generate, maybe going out to the end of the year. I would be looking to sell something as long as I can get credit below the April lows. And I'm also fully willing to take ownership. If we are going to drop, I don't think that's the case, but is this market going to get back 30% gains and wipe away everything from 2025? Probably not. But certainly acting a little silly right now. I think the market's, it's turning over aggressively, most likely because of this. I think the Fed, the Fed watch tool is showing us that it's no longer a, 70, 80% probability of cutting rates. Now it's like a 50-50. And I think that's making the markets a little bit more nervous that, we're going to still see restrictive rates. I don't know. It's a really difficult situation. But a little pullback, we'll see if the little pullback is just what it is or if it turns into something nastier. We are, pretty well hedged across the board. I mean, I keep looking at, I'm gonna deal with some drawdowns in the short term, but I've got hedges on pretty much every position. I've got asymmetric hedges, out to December in case we just have a total implosion. VIX out to April, hedges out to April, hedges out to June. I mean, I don't want them to have to pay 10, 15, 20 to 1, but certainly if they do, that's why they're there. So I don't know how nasty this gets, but going back to the technicals, 1% lower today is going to be testing. So from close yesterday, we'll be testing the 50-day moving average again. Like I said, question is, are we going to close below it? And more importantly, if we close below it, let's say that we close below it for the day. Well, if we close below it for the day, is it going to pop right back up above it early next week? Or is it a close below? We're gunning for that Friday low. We're gunning for that October 10th low. And then we're going to have to take a step back, zoom out of the chart and see, okay, what could this market be telling us? If you take a low to a high, which I have somewhere in here, the high is not even high enough. So there's a low to high. Okay, I know my charts are a little sloppy here, but a 23% fib is back to 64.28. a 38% fib. Lines up almost perfectly with that previous all-time high. I mean, to me, this area is still a test with some support, a test with some support. Obviously, past resistance becoming support. Anything below 6150, anything basically closing below this previous historical high, anything below that, I'd say we're putting this bull market in jeopardy. But we talked about how, there's a big left tail, there's a big right tail. The right tail was here. The left tail is maybe showing its teeth if we get a little bit more downside. Okay. Yeah, I know. That's I'm telling you, man. When you have a risk off environment, there's not a lot of places to hide. You have to tighten up risk. This is why I'm 56% cash. I mean, it's not an accident. I was cautious as we got into August, September. I was even more cautious as we broke all-time highs in September, broke all-time highs in October. Now we're starting to see this odd seasonality where the market is rolling over what typically is reserved for a August, September, October window of weakness. We're doing it now in almost the middle of November. So, and you can attach a myriad of reasons to it, but to me, this is, I don't know, this is either like a delayed kind of August, September, October seasonality, or this is going to be one of those nasty finishes to the year where, we had a great run. It felt like a really easy stretch as long as you had the courage to buy the lows in April, but we could end on a really rocky note to finish up 2025. I will say, and this is just, um, you know, pontificating, but if the market were to end, virtually flat for 2025, um, it just would be like head spinning volatility. We had, you know, a 60 VIX. And if we end up crashing down to like 6150 or 6,000 and we neutralize the year, I mean, could we see another like 40, 50, 60 VIX at like twice in 1 year? I mean, I don't know. So anyway, our job is also to try to win the day. I want to spend some time this morning before we have the open. I did address this in daily profit play. So my daily profit play yesterday did take a loss, but I did have a hedge that ended up. There's two ways. So I am winning the day yesterday with the hedge trade I put on for daily profit play as well as a broke wing butterfly. Um, that allowed me to walk away with like $70 profit. Had I let the thing settle, my broke wing butterfly ended up like 250 to 260. So that would have been a winner of like $310, which was exactly what the daily profit play ended up. I took a loss. I took a partial loss versus a full loss. So I don't know. I mean, it was just one of those days, but I'm happy that we could properly calculate, highs and lows. And so I talk about how I do this stuff every single day. And fortunately, it wasn't like, oh man, what a crazy day, because I was totally wrong. We weren't wrong. So the VIX at one point yesterday was up to about 21.2. Okay. Look at these levels, by the way. Oof. 1% lower is around 66.70. We've got gamma down to 66.50, 35, and 25. It's going to be interesting. I'm going to see so I have a double up trade that is a 66.25. I'm sorry, 67.25. We're going to be opening up quite a bit lower than that. But if my tail is big enough, I'm curious. Let me see. Option strat. Okay, Paul, what's the comment there? Thanks so much for the hedge trade yesterday. Literally had to manage the Iron Condor hedge on the way to jury duty. Flat and IC. Ended up filling the hedge at $4 just minutes before they called us in the courtroom. Nice. Yeah, I mean, that was a 90-cent hedge. You closed out for $4. That's great. Very nice. Okay, let me build this out really quickly. This is an iron fly. Pin price would have been, is it 35 or 25? Let me see. So iron fly at 25. So 25, 40, and 10. All right. So I built this out 25 and 40 there. Well, that's obviously not a true reflection of this. Is that right? 25 and 10, 25 and 40. There's no way it's that much risk. That's weird. What's our implied vol for? So we have a 39.1% implied vol. Okay. Well, that's weird. I don't know why it's setting up like this. Hmm. Anyway, I'm curious at the open. I mean, we're going to be gapping lower. I'm hoping that the tail is fat enough and left enough at the open, but I'm not sure. This might. I mean, again, the max risk is $90. So worst case scenario is that double up doesn't win. But I'm hoping that we can maybe see a small profit this morning on it. It was up $40 yesterday. We'll see. But the open's going to probably distort this a little bit. So max risk is 90 cents. So I'm hoping that there is at least some profit because we've cleared. I took the trade yesterday. We're getting all the time decay. And yeah, we'll see. I mean, it's going to be outside of my profit traps, but because we have all day to manage the trade, I'm hoping that the left side, right side is big enough. 1% is a pretty big slide, though. That's a pretty big slide. This might be, I don't know, this might be small. I can either accept the 90-cent risk or try to manage it for a smaller loss or just give it a chance. If somehow we, miraculously fill today's gap or get close to it, then, maybe we get lucky, but it's small risk. It was for double ups. Yeah, it was in double up alerts yesterday. So daily profit play, I wanted to talk about a couple of things. Let's grab I'm going to grab my daily profit play indicator and our move for the day. All right. So I said the VIX was up to about 21.2. Okay. 21.2. So about a 1.32% move. Now, what I've seen, and this is, doing this stuff for quite a while, but certainly in the zero DT environment, trying to safely calculate out our highs and lows. If I just did the VIX from the previous day's close, clearly that wasn't enough, right? This market showed a 1.8% move from the close. But intraday, with the VIX at 21 and change, there's about a 1.32% move. So take the gap, go 1.32%, and lo and behold, there's 1.32. Now that low, if you can see where my mouse is, I'll draw a line on that. I want to see, did that properly help you get a low for the day? Yes or no? Yes, it did. That is how I was able to hedge yesterday. Am I thrilled the daily profit lost? No, but I saved about 90 cents of risk and ended up grabbing, in some of the hedges up to $400 in hedging. So, a butterfly is a great way to hedge. We kind of talked about it yesterday. So, my strike prices for the put side on my daily profit play were 67.50 and 67.45. Well, we closed at 67.37, and that would have been a full loss, right? So I was shaving off when we were down to like 25.26. I had a partial loss on daily profit play. I took that partial loss. I had a broken wing butterfly with a pin price at 67.35. Well, that paid me a nice little profit. Okay. I also had a hedge in the 45 to 35 zone. That paid me a nice little profit. So I can do the math on that. It was a 90-cent risk. So we had 9, 10 on a hedge minus $7.52. Okay. So 910 is my max credit minus 752. So I've got to go 910 minus 752 for another $158 hedge. So between the broken wing butterfly and our and I didn't manage that hedge into the end of the day. So it was better in here. This was offering, I think credit wise, like this would have been offering maybe $3 or $4 profit. So certainly better than $158. But $158, if I took a loss of 310 and I grabbed $158 and $195 on my butterfly, Does that make up for my trade? Yes. So this is minus, this is plus, this is plus. So 160, 190. It's not a bad recovery. Okay. My point is, did I magically randomly calculate? It's like it's not a guess. This is again not over trading. Certainly not like I need to double and triple down. Eh, it's not the trade. Okay. The reality is watching the VIX for the day and measuring from the gap will help you be pretty accurate. Now, this is the day and this is never fun for zero DT. In fact, I feel kind of victorious yesterday that we had a day that finished near the low, okay, just off the low. And I managed to wipe away, any of the risk and actually win the day. I was actually pretty happy with that. But like I said, it wasn't by accident, and it was because we've seen these examples where the market is gapping. You're watching the VIX, and it ends up giving you like from the gap plus the VIX helps you calculate that low. Okay, so today is going to be another, day to watch because we're going to be looking at a gap of like 0.9% lower. Okay, is the market capable of going 0.9% with a VIX of 22 and just having like a terrible day to the downside? Because if we're at a 22.14 VIX, guess what? That's a big fat move to the downside, right? Would you take a 1% gap and another 1.38% on top of that? That's a terrible day. Is it possible? Sure. Is it likely? No. Not after market makers have rolled this risk, but now the VIX is elevated. There's no vol suppression or a negative gamma. Again, no need to trade heavy. Just let's trade to win. So I'll start out with a daily profit play. We'll look at our levels. We'll see if we can get filled. I think a 10 delta is great. The market's going to be volatile today, right? 10 delta is fine. We should be able to see that, quite a bit outside the expected moves. But from a 22 VIX, 1.38 is the expected move. If we're gapping lower, that's a big move, right? So let me take a screenshot of this and post this in. It was in the members Telegram, yeah. The hedge was. Okay, so yesterday's close, 11:13. Close was 67.37. Just updating this in the tracker. So we had a gap lower. Bears slid prices all day. Calculated the low with gap plus real-time VIX to help hedge near the bottom calculation. So it was a DPP loss, but hedge helped to win the day. So not ideal, but more importantly is, can we limit the risk? Can we survive, a day or survive the week? And, so far we're doing that. And that's one thing about also, not over trading. Look, if today's an example, if we have some just like ridiculous outlier, I have again, I'm going off of what we've seen for 800 plus trades, which is we usually don't see two ridiculous days in a row. That's all direction. Okay. Are the circuit breakers kicking in? I don't know. Are the markets kind of losing control? Is this, bull market slowly slipping away with just a couple of nasty days to the downside? Maybe, it's like we don't know how nasty it gets. Like a VIX at 22 could possibly spike up to 29. A VIX at 22 could spike up to 30. Like this is scary territory with what this market is capable of. Okay. So don't throw ridiculous amounts of capital at this, especially in a zero D environment, because you're still trading with, major gamma exposure, 8, 9, 10 times the gamma exposure. Okay. So we'll see, but charts are in. Let's recenter this thing, 67.37 with current VIX. Okay. So now based on a 22 VIX, we're looking at like a 1.3% move, 1.38. There's my 1.27. There's my 1.24. This should be updating real-time VIX once we go open. 2214. 2214 is 1.38. So I'm going to calculate out. And again, from the, well, I think it's silly for me to say, well, because of this gap, we should just call the bottom. Well, we're going to open up probably at or below the 100% ATR. Okay. So again, I'm going to do this conservatively. We are gapping lower by about 1%. Okay. So we'll say roughly we're going to gap here about 66.70. Now, either this market, finds immediate support and tries to go back up, or we're just going to see, a pretty nasty bloodbath for the day and a nasty way to finish the week. Let's look at the weekly candle. So despite making, higher highs, last week's candle was defended off the bottom, but, could be selling back. Also, this could be one of the first months, and that we're not done yet. I mean, the month of November isn't done yet. But I mean, one red candle might actually be kind of welcomed. I know it's not going to be pleasant, but having one, two, three, four, five, six. So far for this month, it's been actually yesterday. The candle looked like this: tiny little red body and a long wick. And I was like, it looks just like April, a smaller version of it, but just another April. So the fact that the body is kind of filling up the candle now, maybe for the first time, it's given pause. Now, from a monthly candlestick perspective, if we have a big fat red candle, there is a candlestick formation there that would be a dark cloud on the monthly. If it's bigger to the downside, it's not big enough to be engulfing because you have to take out, several candles. But I'd say a dark cloud is not nothing. And, we either pick ourselves up and dust ourselves off for end of November and into December to kind of finish the year on just a stable note, or something has to change pretty aggressively to kind of maintain. But this is why I've been cautious. This is why we've got some hedges in. I think it's a little bit too early to say this is a head and shoulders. But if we were to use this area, let's say we come down and test this October 10th candle, it may look a little awkward, but I think this would be the makings of a potential topping pattern. Okay. It doesn't have to be the top of, the mother of all bubbles in the bearish markets, but at least another correction, could ensue. We'll see. So, all right, let's crunch some numbers. Gamma down to 66.25. It is negative gamma. Watch the VIX. The VIX is up today. If the VIX continues to go higher, like this would be some fresh highs recently over the last couple of weeks. We did have that high back into, this was, I'm not saying this was untradeable, but when the VIX was up here to 29, it was not during market hours. This was overnight futures. VIX was higher, and then it just spent all that time retreating. So we might have something similar to that. Either this is going to be, a level of resistance on the VIX where it just kind of stalls at 22 and maybe comes back down, or it breaks above and we're drifting into, mid 20s again. That's if you're willing to take some premium selling out of the money, you should be able to get some pretty good premium for that. Okay. So I'm calculating out once we get our numbers here. Let me get my gamma level up. Yeah, I'll get those numbers in a second. So I'm going to calculate out the gap. All right, getting some levels on IBIT. Let me check my iron fly. That's crazy if that's even real. Okay, so I got in for 14. See if I can grab a quick. I'm going to try to get out of the iron fly really quickly. Hang on a second. So 1365. I'm going to try to get a double up winner. 75. Okay, I mean, what was that? Feb 20th. We got filled on a waterfall trade for 75 cents. That was the trade we posted. All right, let me try a break even or better. Okay, so my double up trade, I just took a break even. It was 14.10. I got filled for $14. There's a lot going on here this morning. So this quick alert for double up. We're well below. I mean, we're open up way down here. My pin price was 67.25. We are, literally 65 points below my profit trap. And I'm taking profit on that trade. So I'm happy to get out of the trade for just a small winner. It's better than losing. So double up, update that here. Double up, trade management, SPX 14, 11, 14 expiration, entry 1410. Small win. Considering the 1% gap lower, and we're 60 points below our pin prices. Okay, I'll take that win. Again, small win. Now, let's get our numbers. VIX is at 22.7. That's current VIX. Okay, so 22.7 is a little bit higher. 1.42. Again, if the VIX is dropping, or I'm sorry, if the VIX is going up, you want to be conscious of that level. Again, I'm being pretty conservative here, but keep an eye on the VIX. 1.42 from the open. 1.42. It's about 65.70. 65.70. 65.65. Potential bottom. VIX at 22.7. Now, again, it becomes a little bit more difficult to call the bottom if the VIX is going up. Okay, VIX is at 23. Let's recalculate this. 1.43. Okay, again, it shouldn't go this low. We're talking 60. I mean, 65.70 seems pretty safe. So 22 to 23 VIX. Okay. So what I'm going to look at here is let's try to find some deltas. I mean, part of me wants to get almost like more skew in the call side and just do like a 15 delta call with like a 10 delta put to stay out of the way. But gap fills around 67.26. So with 15, I mean, the gap fill would be 25. I'm just going to stick to my guns here and go low delta. I'll go 10 delta. Go 10 delta. See if this fills for a buck. All right, daily profit play alerts. $11.14. Okay, that's pending for a buck. Okay, let me get some gamma. So we open up around the 100% ATR. We do have some gamma still to the downside. 69.25, we saw that here as well. So 66.50, 66.35, 66.25. Previous lows from Friday last week. respect the potential volatility. It's as simple as that. We're back at the 50-day moving average. Today's candle close. Look at the SPX here. If the candle closes bullish today and gets back above the 50-day moving average, then there's clearly some interested buyers like at that level. Okay. It's volatile, but again, if we close below that today, then yeah, it's not pleasant. 50-day becomes the 100-day moving average, right? October 10th candle is a potential like test, and the bears are kind of getting the upper hand. But if we can, minimize the damage today, maybe kind of stabilize, that wouldn't be terrible. So I'll see if I can get filled. It's showing about $1 right now, but bid ask is going to be a little bit wider with the VIX high. Okay, VIX is at 22. I mean, that's a quick retreat from 23 down. Let me check one thing really quickly on the SPY. I just got filled for $1, so daily profit play is active. DPP update, 9:37 a.m. Eastern time. Okay, looking for 70 cents lower profit. That trade is in. Okay, the Ironfly that's closed for profit. Let's ungroup this one. So 1, 2, 3, 4. DPP for today. This trade was filled for us on waterfall income. That trade got filled for 75 cents. There's a $1,000 profit trap. We have a 15% buffer. That's actually a pretty good fill. So let me update that in the tracker. Okay, so trade number 124 is filled. All right, Deanna sent in an email or a message for waterfall income. This week's masterclass, Tuesday strategy 2, pending order filled at 75 cents. So that's trade number 124, SPX, entry 75 cents. Okay. All right. So watching this, set this at, I'm going to go 50 and keep an eye on it. I'm going to try to go for a 50% winner since we went 10 deltas. It got filled pretty easily. Let's keep an eye on this price action for the day. So we're all the way down to 65.50 or 67.40. Let's keep an eye on those numbers. 67.40 would be filling the gap for the day. 65, what did I say? 65.50. 65.50 would have to be a probably over 200% ATR for the day. I'm not saying that it can't happen, but after letting price slip yesterday, it wouldn't surprise me if it's, unable to do that. So we have a 200% ATR at 65.71. Again, anything is possible, but still unlikely that the market maker is going to let a risky day like yesterday slip into 2 days in a row. It's very uncommon. Okay, the trade's in, Greg. It's in daily profit play. I did 10 deltas, got filled for $1. And if it looks like today is like, fairly calm this morning, I'm going to try to go after like a 60-cent debit or 55 or 50-cent debit. I mean, I don't want to be silly to the upside, greedy wise. Let me see if the ADR is bumped up a little bit. ADR is now up to 64 points. We certainly exceeded that yesterday. I mean, price action from the day was about 100 points. So ADR did not contain price. I'm going to take the VIX high was around 23. So VIX high looking about like a 1.4% move. If somehow this thing opens 1.4%, 67, 67.55, 67.60 potential high. That would be the VIX at 23 using gap price. Okay. And the really conservative trade would be just going from the previous day's close. So we close here, go up 1.4. There's your VIX box right there around 68.30. Okay. So I want to see one thing here on the SPY. If I went out to the end of the year or even into January, let's go end of January. I'm curious on the SPY. Could I go all the way down to the April 2020? This might be a project options edge trade. So back here, 480. I'll use the 480 lows. Either do a ratio spread or maybe even let's see, could I do like a 65, get like a $500 profit trap here? That's a $500 profit trap. Now can I generate a premium at the 480 to pay for it? Not quite. 480. Yeah, that's way too much risk. Fudge. I thought I could do a little, fancy 111 of the profit trap. I could just go down to the, 480, sell a put, or do a ratio spread. Let's see what it does. 485, 480. That's a pretty safe income trade. Get $1,000 profit trap. Give it, I mean, even an income trade here for a $1,500 profit trap. All right. So here's the trade. This is going to be out for Project Options Edge. If this fills for over $1, I'm actually pretty happy with the trade. It'd be $100 income, and it's a $2,000 profit trap. So if I take shares, if we're below April lows, below 480, I take away $20 and another dollar. So I'd own shares at 459, which would be a monster discount. 459 would be, 33% discount from all-time highs. I'm happy to kind of start there. So anyway, see if I can grab a buck 10 out of this. I'm gonna put this in some margin accounts. So buck 10 not filling. Let's try to go maybe $1.08. Bid price is like 105, 106. So I'll play the bid if I have to. 107, that's mid. Come on, dude. 105, that's the bid price, man. What? Filled at 104. Okay. Trade's going in. Filled at 105. Okay. Man, I'm at the mid. I'm at the bid, man. 104 pending. There we go. There we go. All right, got filled at 103, 104, 105 credits. So Project Options Edge going to get a new trade. I could have taken a lot more credit on just a naked put, but I'm going to build in a little profit trap and lower my delta. So if we look at the mechanics of this trade, this delta goes, if I just did a naked put, I want you to see something here. If I just did a naked put, so this trade here for a buck, it's going to be a ratio spread. Okay. So 500 by 480 for $1.04. Now I'm going to break this trade down. Okay. If I look at going just a naked put, so if I just did a naked put, I can get more credit, but the delta is 2.73 and my break even price, let's say price came all the way down to 480. 480 minus $1.32. I own shares at 478. So what I did is I put in a buffer where I buy the 500, I sell the 480 with two contracts. So it still looks at like a naked put at the 480, but I can pull in $100 and I give myself a $2,000 buffer. I lower my deltas and I can bring my cost basis down by $21. So my 480 assignment price, if it's unlikely going to get assigned, but if it gets assigned, I'm owning shares at like 459. That's to me is a much better level. Okay. All right. Daily profit play is in. What's everyone talking about? Daily profit play is in. Member alerts posted at 9:35 a.m., filled at 9:37 a.m. We're in a trade for a buck. All right. Project Options Edge. New trade. SPY 130 expiration. Buy the 500 put. Sell the 480 put. $5 credit. 99.5% probability of profit, which is pretty good considering we are at a 23 VIX right now. Probability of profit. Assignment risk, about a 3% chance of assignment. Building out a ratio spread with a $20 profit trap. Most likely, this trade will be a simple income winner for $5. But if SPY were to drop below 480, willing to own SPY shares, 480 minus 20 minus $5 for a break-even price of 480 minus 20 minus $5, 458.95. Okay. And even if I were to hang on to those trade, if I hang on to those shares and just add covered calls, that's an income trade. So a bit creative, but I think something that works. So more than anything, that's likely going to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's going to be $1,000. That's what it's going to be. That's probably going to be $1,000. Simple way to generate some income. But if I were to, own shares at a 30+% discount, I'd be happy to take some ownership. It would annoy me to see the market, give everything back from 2025. I don't think we're there. I think that it's so easy to think like, how bad is this going to get? Look, I drew this broadening pattern for a reason. Okay, these can be pretty dicey patterns, but there's a lot of noise inside of a broadening pattern. I think we need more time in this area. I think more time to figure out two things. One is if the 50 period moving average will still hold, then this market is going to just cling to support, and it's going to be a really rocky push to maybe all-time highs. But if it gives some of it back, as long as we're not doing too much damage below this October 10th candle, then we tag lows, but also tag highs. And I know that's really confusing for traders. So I'm just trying to be safe and stay out of the way. This is why I'm doing waterfall strategy too. Okay. All right. How are we doing out there? I know there's a lot going on. Probability wise today, we're likely not going all the way up to 68.30. We're likely not coming all the way down to 65.70. VIX has retreated a decent amount from 23 down to 21. So you could probably shave a little bit off of that if you want to kind of tighten up your VIX box if you're looking for highs and lows. But I'm just hoping we can turn daily profit play into a winner based on our 10 deltas getting filled. Hopefully the market's just not super bullish and reactive today. So when market makers let the risk slip for a day, usually they tighten it up the next day. So I'm kind of banking on that right now. Our call side, by the way, call side for daily profit play today is 67.40. We're 6,700. So we're still like 40 points clear. Obviously, anything can happen. 40 is pretty much a gap fill. Okay. I don't think we'd have like a crazy surprise if we went to 67.55. That's a 1.5% move from the lows today. Going at the open. That was the VIX at 23. I don't know. I could throw a butterfly in there. I'll throw a butterfly in. I'll use the 55 and 60 call side. So 67, 55 and 60. So if I went 55 and 60 and 70, that's offering 50 cents credit right now. Oh, baby. Let's see. I mean, maybe this is crazy volatile today. All right, I'm not going to call the top in here. I'll use the previous day. So 60, let's go way up there. Let's go way up here. 68, 25 and 30. So 20. I'll go 25 and 30. There's probably no way this one gets filled, but we'll see. All right. So we're going to hang out there. It's an interesting read on the day. So we open up, go lower. Um, call and put sentiment is actually almost dead even at 34 to 32. The fact we've had, 50 points of movement in the first 20 minutes of trading is kind of crazy. But level's 40, right? 40 and 45. So let's mark this on the charts. So 40, looking to see if my price will stay below 40. So 67.40. And the put side is 65.50. 65.50. Okay. So can price stay in the middle? Again, we have all day, but let's find out. Okay, everybody all right? I haven't seen a comment here in a few minutes. It's been 12 minutes. Very good? Okay. So quick fill for by the way, I'm just curious right now, since price is going up, what's our double up trade? If anybody just is still in the trade, here's my 14. I was trading for like 13.30, 13.40. So you've got about 70, $80 of profit on that double up if you're still holding that trade. I got out of the break even because we were so much lower. If you can see my numbers here, 67.25. As the day goes on, as time passes, the tail side, the left side, right side of that trade gets narrower until basically it's going to be a trap within 67.10 to 67.25. Okay. So even going to the open at 66.70, I still grabbed the profit out of that trade, and that was 60 points lower than my trap. But right now it's nice. Like if you're still in the trade and it's 9.59, you've got about, I don't know, probably $70 to $80 of profit on the trade. But I grabbed a break even on it. It was 14.10, closed out for 14, so I grabbed a quick 10-cent winner, no big deal. Better that than, I mean, it wasn't a big risk. It was 90 cents risk, but even grabbing a small winner is better than losing. And now it's up about 80 cents. So if you're, in that trade, I would protect it. If I was still in the trade, I'd be taking out, 50, 60, $70 profit and taking that return on risk. It's going to be pretty difficult for it to find that profit trap today. So what you'd be banking on would be, we need to see price come back and basically test the gap. If price can test the gap, then I would still take the profit. I wouldn't want to be greedy, hang on that thing all day, because price action today, after such an aggressive slide yesterday, we could go, open, down, up, down again. Maybe it's just a noisy day. Friday is going to be something like this. Maybe it rolls over and gets worse later in the day. I have no idea. But hopefully our daily profit play, if it comes back and recenters, then our daily profit play is here at 40 and here at 66, 65.50, which is way down here. So we have all sorts of wiggle room to just make sure that if price stays below this or above this, our dollar looks pretty good. And if I mean, anything 70 cents or lower is pretty mechanical. I'm possibly, if I think that it's a good trade for us to hang on to a little bit longer, I'll probably go after a 50-cent debit or lower. Mitchell, good question. I mean, you're in the right place. You're here watching, here soaking it all in. I do this stuff every day. So here's where I'm at. I mean, I'm here live every single day for daily profit plan. Member services, you want to trade with me every single day. We have a pretty good routine to get our, highs and lows and probability trades. We swing trade and index trade every single week. News events and catalysts, double ups. That's like a 0 to 1 day trade that's usually only focused on high reward to risk. Pinch point, we've got a bunch of trades in for the scanner that I built. This is how to hedge. This is very discretionary. And then my foundational education is I'm going to put here, I'm just going to add this foundation and foundation. So for 27 bucks, I have a quick start options guide. And I built this practical options course. I've talked about this many times, but I don't think a lot of traders come in with prerequisites. I don't think a lot of traders come in with like a foundation of learning how to trade options. If you go to, investopedia.com, if you look at like just basic YouTube videos, they're all the same and it's super boring and your eyes will gloss over because it's just reading definitions. A call option is the right, not the obligation to own shit, blah, blah, blah. The put is the obligation. It's like you have to learn vocabulary. You have to learn about Greeks and they make it really confusing. The strategy names are silly. So point is, I built these foundational education pieces for, a 16-year-old kid. And I also built it for 80-year-old clients. So if you're somewhere in the middle, I think this will help get you up to speed with taking away some of the intimidation factor of learning how to trade options. I wish I didn't sound like I'm so option heavy, but I am, because somebody asked me yesterday, what else do you like to trade? I'm like, I trade everything. I trade indexes and I trade stocks and I trade Forex and I trade crypto and I trade futures, but I trade options on all that stuff. And the reason why is because the tool, as an option trader, the tool allows me to set risk and reward exactly where I want it. It is a lot different than just buying shares and hoping price goes up. It's a lot different than, buying a future for the day and hoping price goes up or down. So adding an extra layer to it where you have price and time, if I give an asset time and I expect price to go up or go down, I can make money, and it takes way less capital to trade an option than it would if I just did the outline or the outright asset purchase. Even in currency pairs. I traded currencies since 2007. I managed a successful currency fund for over a decade. The amount of risk that I was taking to basically trade zero leverage and generate 20% a year, it was so challenging because my 20% upside was typically met with 10 to 20% downside. And now, as an option trader, primarily everything I trade asset-wise, portfolio management-wise is options. Now trading options, my risk-adjusted returns are, I'm getting 25, 30, 40% upside for 5 to 10% risk-adjusted returns. So I'm obviously increasing my gain potential, my reward potential, but just way, way, way better risk management. And that is ultimately my job. My job is to be a risk manager. If I can manage risk, it's pretty easy to make money. So anyway, I'm pretty option heavy with the services that I offer here at Prosperity Pub. It's very option heavy. I do trade Forex. I still manage about 10% of my funds or Forex trades, but that's pretty small. But now it's project options edge is a little bit of everything. I trade gold and silver. We've got some Bitcoin exposure. We have some ratio spreads. We have some naked puts. We've got more campaign trades. We own some shares. So it's I'm not going to say it's advanced, but it's you have to have some capital to own some shares and trade a campaign around it. I bought shares, I added options around it to lower my cost basis and also generate income. Everything else here, there's no ownership. It's just risk defined on an index. It's risk defined. It's risk defined. It's risk defined. Okay. It's risk defined. It's risk defined. Crash insurance is my least high probability win because it's about 10 to 1 or 20 to 1 hedges. They're very cheap. $250 to $500 hedges that pay $5, $10, $20,000 in profit if you need it. These aren't fun trades to get paid on because all it's going to do is help you offset the risk that you're in with other trades. But it helps. This year when the market was down 20%, I was down about 5 or 6% because of some of the crash insurance that I had. Okay. So anyway, to Mitch's question, if you want to know more, I think a great place to start, if you're new to me, a great place to start is dip your toe into a $27 foundation course, my quick guide, get introduced to options. If you're familiar with options, great. Then, if you want to start jumping in and trading every single day and trading some options with me, great. But if you're not quite there, you want to get kind of the learning curve out of the way. My goal is to get somebody on board with option trading in a couple of weeks. from terminology to seeing me do this stuff every single day to, trading with me every single day. I know there's a lot of moving parts. You have to remember also that this is a trading session. So there's nuggets of wisdom here. There's experience here, but it's also pretty fast paced when stuff is moving and shaking. And there's a lot of there's hundreds of positions I'm looking at every single day. Yeah, there's a lot to talk about in 60 to 90 minutes together. So when I can break that down into master classes, when we can go and have education sessions together, it becomes a little bit more digestible. The pace is slower. It's all focused on education and exactly what we do to execute our trades and manage. Okay. Randy says, what were those opening deltas? I had them opening deltas around the 10s. And now they're, 25. So the call side got threatened a little bit. Let me see something really quickly here, Randy. If I go back to, let's go somewhat neutral. There's my call side. My put side is all the way down to like a 3 delta. But we've also, keep in mind, man, we've had like a 50-point move off the low. The plus or minus on the day was 45. So if I looked at it, let me look at a trade right here. I don't know if I'm going to take I don't want to double dip necessarily. But if I did a 10 delta call now, okay, a 10 delta call now is all the way up to like 67.70. Okay. And a 10 delta put is 66.15, which is obviously lower than today's low, but like 66.10. I could go 10 delta now and get another 75 cents. I might put this in for $1. If I'm willing to take the risk, it's 2 trades on for the day. I'm risking $800 to make 200. 200 is my max profit, but 800 would be my risk. Okay. What's the difference? It's like a parent company is one of them. Deanna, who am I with? Am I with Trading Pub or Prosperity Pub? I'm pretty sure I'm with Prosperity Pub, but I don't know.
Oh, sorry, you're Trading Pub.
I'm Trading Pub. Okay, I'm wrong. I'm Trading Pub. I honestly don't really know the difference other than like there's the publishing side and then there's like the trading side, the education side. So that could be the difference. But it's one big happy family. Unless we're not, I don't know. I'm also like, I'm not going to say fairly new. I've been doing this financial education stuff for 12 years now, but I'm a year and a half into Trading Pub. But I've known them. I've worked with them, on and off for the last 5-6 years. I've known several of their franchise owners and experts and things like that. So I've known Roger for a while. I've known Nate for a long time. Anyway, all good. Okay.
Well, all our customer service goes to the same place. So no matter who
Okay.
you contact, it's going to be the same people.
Gotcha.
So yeah, don't forget about that.
Okay. I'm not freaking out. So chrispulvertrading.com. So they built me a site that just kind of showcases. I'm also getting like a daily blog going. So I think Sean is putting in some info in my market news. So when I do there you go. So we've got like a blog running every single week. So if you want to jump on the website, Chris Pulver Trading, go to the homepage. There are, links to my services here. And again, like ultimately it's this. My job is to show up and trade with anybody that wants to learn every single day. You will see that there is a routine to what we do every single day. There's a method to our madness. There are calculations, there's math, there's probabilities. And if I didn't trust that stuff, I wouldn't do it. If I didn't think that I could win every day, I wouldn't trade. Okay. Now take everyday trading. And also, if you want to increase your probabilities a little bit, also add potential backup plans to increase your probability of profit, go out longer. Go out 30, 45 days. Go out 60 to 90 days. Go out 120 to 360 days, right? Time in the market tends to be more important than timing the market. So every single day, it is a very black and white reward to risk. So what I'm doing every single day is trying to play the highest probabilities to make money today. Yesterday was an example that we haven't had to do this in a while, but we had our core trade for daily profit play lose. So I play defense. And what's interesting is somebody asked me yesterday, how would you hedge? And I said, like, it's not really a hedge for the day. It's more like I'm just trying to play defense in case I need it. Because a hedge is, I expect to lose on a hedge. If I'm playing defense, it's because I recognize that my trade is at risk. I recognize that there is a threat to my initial trade, which was daily profit play yesterday. So I played defense and ended up winning the day. So rather than losing $400, I ended up making about $100 net on the day between a couple of hedges. So again, I say hedges, but I meant like playing defense. I played defense yesterday and it worked out pretty well. And I certainly left money on the table. I had a $1.95 on a butterfly. I had another dollar on a butterfly, and then I had a $300 winner on a hedge, and like $155 winner on a hedge. Like that's what I could have made yesterday, and I lost 310 on my daily profit play. So if everything went perfectly for me yesterday, I would have grabbed about $440. Okay, I didn't and I managed it in the final, 15 minutes of trading, 10 minutes of trading. I ended up grabbing about $100 profit on the day. That's better than losing. So I played defense and it rewarded me. Okay. Knowing full well that if I'm playing defense, I'm also still taking on more risk. I get that. So if I were to lose on the day, my defense trades were also very cost effective, super low risk. Like I was risking $90 to make up to like $1,400 or make up to $100 to $900. So the defense trades were high reward, low risk, which is my point. So if I was going to get crushed yesterday, I would have maybe lost $500. I can always come back and survive and trade that the next day. You know, the days that sting, and I've had this happen. I mean, I get a little bit overactive in zero DTE, and I throw a couple $1,000s risk in, and I take a loss for a couple $1,000s. It's even managing a few $1,000,000. I'm still like annoyed with myself with like, what are you doing? Like, don't overtrade. Just so I sometimes, and I'm it's rare. It's rare that I kind of lose my cool, but I don't know. I just think I'm pretty disciplined. I don't have a lot of emotional highs and lows, but it's like I press buttons and I like to trade, and I think that I can maneuver myself to win the day. And sometimes I do, and most of the time I do. But if I don't, I have to accept that there is a pain point. Like I don't like to lose more than a couple $1,000s a day on a daily basis. That's a lot of risk. Okay, I don't mind tying up a couple $1,000s in buying power, but I certainly don't expect that to be all at risk. You know. So anyway, there's a lot of ways to do it. Um, Okay, Mitch says I'm a part of Prosperity Pub. Have enjoyed information, learning to trade. Okay, cool. Well, again, I mean, you're here in the session. I'm happy to have you here. Literally, the daily profit plan service on Monday through Friday. It's live every single day. It's open for anybody. I'm happy to teach. Kane and I go live on Mondays at 2 p.m. for the GAM report. I do this stuff every single day. All my services I usually have, sprinkled in. Like we had a winner this week on Pinch Point. I just took a trade on Project Options Edge. We had a trade filled this week on Waterfall. We actually had 2 trades filled on Waterfall. Newsbreakers, we had a winner close this week. Daily profit play, despite the defense trade yesterday, we've actually had a very profitable week. So it's active stuff, and I just touch on this. So there's ways to figure it out with me, like service wise and alerts wise. But I keep going back to if you're in the learning process, I'd like to help people learn faster. I mean, I know that sometimes a trading session like this seems high energy and it seems like I talk 100 miles an hour, but foundationally, I break it all down like bit by bit. Like think about this as if I just had like a whiteboard and I could just draw things out like a coach on a whiteboard. I just draw out what the market's doing. What is our trade from start to finish? Where does price and time have to go for us to make money? Mostly price, but like over the course of the time of our trade, is price above it or below it? Do we make money? What's our reward to risk? My favorite part about an option trade, and I've shared this example before. This is kind of crazy. But here's also why I started to migrate away from currencies. Okay. One of my silliest examples that I had in currencies was the good old Swiss yen, which is sitting here at all time highs and still refuses to go down, which is fine because I'm not in it. But I will give you an example. Back in 2015, we had the Swiss National Bank flash crash move. Let's go back to a daily chart here. Okay. So this worked a couple different ways. I and this is over a decade ago, but believe me, I remember this trade. I'm going to, can everybody just follow my chart here? Okay. So I'll give you my analysis. We'll start right here. So you don't see anything further to the right. So we're talking, August, September 2014. So what did I just see on the Swiss yen. Okay. So I see resistance here, resistance here. I saw this rally up here, and then we came down to make a fresh low. So the trade that I put on was a swing trade where I'm going to sell this area. And my stop loss plan would have been okay, this is maybe a light stop loss above this high, but the safer stop loss would be a little bit higher, right? That should have been my plan. Okay. But I was also a trader that was pretty confident that I traded very small and I could work my way through positions and not necessarily have to take a loss. I could just, manage a percentage drawdown and then work my way through a trade. Okay. And again, I'll make this lesson will make a lot of sense because this is why I advocate for trading options. Okay. Because in Forex, if I took this trade over here and I wanted to sell and I put a stop loss here, okay, fine. But if you've ever traded futures or ever traded Forex, there are heavy amounts of manipulations at these highs and lows. There's liquidity grabs at these highs and lows. So what the market tends to do is this might be a lower high setup, but if it comes to test the high, sometimes it likes to spike at these highs and then go down this way. And traders are like, "Oh, I got stopped out," and then the market went my way. I should have. It's always like in hindsight, and everyone loses at these tops and bottoms, and they see price go their way, but they end up losing money. So my alternative to that was I would trade really small and I would give the market room to say, okay, I'll take trade one here, maybe trade two here, and then maybe trade three here. And I'll kind of scale in with if I'm going to get all three positions filled, I might be in like a 2% drawdown that I can manage my way through. Okay. Is that a good premise to kind of build this trade out? So there's a lot of manipulation in futures and currencies because such a liquid market trades 23, 24 hours a day. There's a lot going on. So I basically deleveraged my Forex portfolio so I could just take really small trades, build up micro lots into mini lots into standard lots. And when I got paid, usually my P&L looked like this. For a year trading in currencies, I would have nothing, 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 and then I'd make like 10%. And I have nothing, 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 and I make like 6%. And then nothing, nothing, and I make, another like 7 or 8%. I usually had like 3 or 4 months that paid me all of my profit for the year because I would just build, 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 and then take a bunch of profit. And I did that for like a decade. Now, it worked really well, but it was super stressful. And some of the drawdowns that I would carry would be a little bit more, they'd be a little bit more violent than what I wanted. I would carry sometimes, I don't know, 10% drawdowns, 15, 20% drawdowns. And I'm like, dude, I'm like one bad trade away from like being a shitty trader. So it just made me think like, I've got to do something different. This can't like this isn't fun for me to have that much stress and carry millions and millions of dollars with that much risk. So all that being said, let's talk through this story because I can make this all in this fun little journey of Forex trading, and then I can put it in perspective of trading it as an option. Okay. So let me put a vertical line here as we kind of start this story, and then we'll tie it all together. And I'm watching price, by the way. Like price is chilling at 67.02, so we're hanging out. All right, so we're going to start right in here. This is where my trade idea started. We had this high to low, and I thought from this level right here, I'm going to sell like a 50 to 60% pullback. And I'm going to go trade one at that pullback, trade two at this high, and trade three at this high. Everybody with me? So basically, I'm going pullback, high, and high for my three kind of test levels. And I want you to see what price continues to do. Can everybody see what price continues to do? Price blows through my highs by another 500 pips. Okay. And I mean, the reason this one sticks out is because it was a long time ago, but I, remember some of my interesting stories in in trading. So what did that market do? So even though it did a run to these highs, it did it very inefficiently. I was in a conference speaking in Vegas while this was all happening, and I'm just knowing that, well, my third entry got filled. Now what happens? We had a little indecision here. I'm like, okay, cool. It's finally respecting the highs. By the way, these are all-time highs. These are all-time highs. So I'm trading this thing at all-time highs thinking like there's resistance there, right? No, it went another 500 pips higher. So I am now nursing. I didn't close my trades out. I didn't stop out. What I did was I scaled out. So I took a loss right here. And as price went against me, I scaled in again. And I scaled in again. So I took a loss here and I took a loss here, and I'm still in one, two, three positions. Okay. Now I realized that this loss here, I was in about a $25,000 drawdown, which percentage wise was about 12%, give or take, at the time. So about a 12% drawdown. That's not fun, but I'm confident I can still work my way through it. I've done it in the past. I'll continue to kind of work through it. But anyway, took a couple losses, took some hits. I lost a few $1,000 down here. I'm still in a trade, managing a drawdown, realizing my goal is to try to get this money back. So as I add more positions, now I start to see the perspective of, okay, I think that price is actually responding. And at this top up here, we actually form another price pattern. We have this low, we have this low, we have a price pattern here, and we come all the way back down. And guess what? We're coming all the way back down to this inefficiency. So what I was doing over here was adding more to this trade. And I went from 3 positions to then 10 positions, and I traded it to a symmetry move. So all I did was a symmetry move to a high, low, lower, high, lower, low. And you can see that that actually works out pretty well. And it comes all the way back down to where? Like, this is the crazy stuff about the Forex market. It's also very pure. You see this inefficiency? This inefficiency in price, because it went so aggressively going unchecked, it literally to the pip came back to find the inefficiency. And then right after that, we had the Swiss National Bank, which is insane. So my symmetry trade up here, 1, 2, 3, 4, coming all the way back down in the structure, into this inefficiency. I went from taking 2 losses to adding about 10 winners. I go from a, $4,000 or $5,000 loss to like 20 plus $1,000 in profit. And right after that, the Swiss National Bank. Okay. Which after that, I was actually, at the time I was short the dollar Swiss, pound Swiss, and euro Swiss going into that, because if anybody followed that back in 2015, the reassurance was that the Swiss National Bank was going to hold and peg the 120. And I didn't believe it, because I'm like, there's no way that they can defend this. There's no way they can defend this. And so I took a short. I took like literally like a half a lot short. So $5 per pip, and the thing broke. And I never expected this, but I woke up to like $100,000 in profit during that Swiss National Bank debacle. Okay. And after that, I took a bunch of profit, and then I went to the technicals. And because we had such an inefficiency, I traded essentially, this was a double top type move, or all the other currency pairs were double bottoms. And I just measured a fib and got paid very well over the course of like 2015 and 16. Now, I say all that because this was, even though I came out on the right side of this trade, what's a lot easier? If I have a trade idea back here, this is where this whole idea started. And I just said, you know what? I think I'm going to call a top right here. Then I do a bear call spread. If I traded options, and I'm just putting this perspective of trading options. If I sell a call, buy a call, and I think that price can't go higher than this. Well, if I did this for, let's say, $100, okay, price goes against me, 500 points, and I only lose my defined risk trade. You know how much easier it is to take a small loss right here and then just take another good trade at the top with an option trade that's very binary? Because price can literally go all the way against you or all the way for you, and it's defined risk and reward. That, to me, this is what resonated with me about being an option trader. I've had ridiculous runs where, I'm fighting the trade. I get stuck in the wrong side of a trend because I believe in the technicals, in the efficiencies of the market. And you can see that even with this inefficiency, the market came back to it. Right? Even with this inefficiency, the market came back to it. Okay. So I still believe in the purity of the technicals. The problem is we're talking a 500 pip move here, and we're talking a 2,000 pip move here. And if you're in a position like Forex and you have a one standard lot trade that's $10 a pip, okay, this one trade, which happened in a night, this was literally a 1-day trade, you'd be down 20 grand. And there's no stop losses that are safe. Okay. So that's the type of risk that you're dealing with as a currency trader. That's the type of shenanigans that the market might throw at you. And if you don't know how to navigate that stuff with little to no leverage, which is what I was doing for years, if you leverage, you will get killed in this market. So I take it away. I take the power of the leverage away. I use it to my advantage versus my detriment. And, again, it really felt like I'm a survival trader in the currency market. I did really well. But my gosh, when it was option trading, it just felt like, so you're telling me that the market can literally go to infinity or crash to zero, and I'm only going to risk or make what I initially thought on the trade, right? So that's how I trade options. I just know that the result is very black and white. There's no surprises. If price is above if price is above my level where I need it to be for me to make profit, I make profit. If price is below, I accept the risk, and that has made me a much more disciplined trader. So a decade of that with lessons like this that were close calls, and look, I admit I got very lucky. I would say I got very lucky on the right side of the Swiss National Bank because I was right on the crash side as well as the efficiency side of this market kind of coming back to where it all started. So did it ultimately come back to the same level? Look at this. This is what I'm saying. Like, this is cool stuff about technicals. When the market had this as an inefficiency, it found it right here. When the market had this as an inefficiency, it found it over here, even though it took years to do it. But we had a top to bottom, top to bottom, top to bottom. That was like 75 to 80% of the pullback. And then we had about a 70% zone, which gives us more of a wedge trade. But it ultimately came back down to find the pocket or the breakout point. But this is not fun. Like, this isn't fun to sit here and watch like 1,000 pips or 2,000 pips go against you. So I take away the leverage. And again, it's way less stressful to trade options around this stuff because look, I've accepted losses as a trader now probably better than ever before because of options. So I just share that because as a currency trader, difficult stuff, man. Some crazy monetary policy, low and high risk volatility, risk on, risk off, all these things. Even though there's only 28 currency pairs, you're dealing with a globe of geopolitical risks and a global currency risks. And there are some wild and crazy things that these central banks have done over the years that have highly manipulated these currency markets, and it can be exhausting, you know. So anyway, but if I just traded options, that wouldn't even be a memory because it'd be like, yeah, I remember taking a loss in there, but it's like it's a binary, like I risked $100, I lost $100 versus I was in a $20,000 drawdown at one point, and for my portfolio it was like six-figure drawdowns. It's not fun. So anyway, fast forward to now, options I think can just make you a better risk manager. I think the options make you a better chess player. And if you like playing the game of probabilities, you play the game of probabilities. And there's nice bullish biases baked into the markets. The bullish market is persistent. Bull markets last a lot longer. If you just give the market time, you're typically going to make money. But it's all about risk management because we will have bouts of nasty corrections. We'll have 5, 10, 20% corrections. We've had 7 in the last decade. 7 corrections of 20% or more in the last decade. That's not going to stop. Like, in fact, it's probably going to be more frequent. What would be wild to this year would be somehow if the markets gave us like another spike up to like, 40, 50, 60 VIX in the same year. That would be absolutely nuts, but it could happen. So it's just stuff like that in the back of my mind where it's like, I'm pretty risk averse, but I'm really active. So anyway, we'll figure it out. All right. What else we got here? Human nature drives a person to go bigger than they should. Yeah, it just comes back to dollars and percentages. One of the I'm thinking I've got a slide in here somewhere. Let me see if I can find it. Downloads. Goods priced in, shutdown, Q3, time to sell, key technicals, drawdown maybe. Yeah, here it is. I think this is probably the one chart that resonated with me the most as far as like keeping risk tight. Look, if anybody's ever experienced ridiculous drawdowns in their own accounts, you know how difficult it is to recover that, especially from an emotional state where you're very damaged. You question your strategies, you question why you're doing this, you question the amount of stress you're going through, like how painful it is emotionally. Like, losses hurt. So when I take away, and I understand, look, if I'm keeping my loss of capital less than 10%, I can't expect 50 to 100% upside. Okay. But I've done a pretty good job over the years having lost to capital less than 10% and still being able to make 10, 15, 20% on the upside. That again, because of options, it does help. I'm pretty active. I traded probabilities, income, income, income. It adds up. But when you can keep the losses under control, it's usually a pretty easy number to recover. But as soon as you start getting, I mean, look at the difference between 10 to 20%. 20% drawdowns, 20% loss of capital, you now have to make back 25% just to get back to break even. 30, 40, 50%. And this works both ways. If you keep your risk under control, this helps us always recover. So I've said if I can keep my drawdowns under 10%, I can always recover a lot easier than if I was digging a deeper hole. Okay. So the ability to make, 10% drawdowns to 10% gains, pretty fair. The ability to turn that into maybe 15, 20% gains in the upside without taking on necessarily more risk is also pretty fair. But this also works with why we should be focused on buying discounts in these markets and these crazy 10, 20% corrections that happen. This is how the wealthy have become wealthier because we still go to all-time highs. And if you are investing at a 20% discount, it is a 25% return on your risk to get back to those all-time highs. So imagine, look, if you're worth $100,000 and you have $100,000 invested near the lows, getting back to those highs over time, which in a lot of these cases, the last 10 years have not taken that long. Like we're talking like maybe a year to recover to those highs. So you go from all in at $100,000 and it's not perfect. It doesn't have to be the exact bottom, but you're getting probably 15 to 25% return on your risk by getting back to those all-time highs by letting the market recover. Okay. The wealthiest people at 20% corrections, 30, 40, 50% corrections. I mean, they have the capital to add more to their portfolio. So, it's unpleasant to see the market down 30 to 50%, but it was down over 30% during COVID. Think about how many wealthy investors, hedge funds alike, but wealthy investors that were averaging in during COVID in 2020. Every dollar that you put into the market had the upside potential of 40+%. Because we not only recovered from that COVID bottom, but got back to those highs and then went, 50 to 100% higher over the next year or two. And then we had another crash in 2022, which was a 30+% correction again. So, I get it. Like you're adding more capital in, there's always risk, but the ability to turn, a drawdown into gains and do it twice in 2 years or 3 years, 2020 pullback, you get a chance to make 43%. 2022 pullback, you have a chance to make 43%. If you have assets working for you, it's like, it's just, this is why the inequality gap has been so dramatic, because we've had such aggressive cycles in the markets. But like, if you have assets or you stay in the market, stay invested, they tend to freaking pay you in these giant recovery cycles, and what's going to be scary is if we ever have a 50+% correction, it's going to knock the socks off of every, weak-minded investor or weak-hearted investor. If we ever deal with another 50% pullback, it's going to be awful. I promise you there will be blood in the streets and there will be casualties everywhere, but there will be brilliant recoveries where you can make a lot of money. And this is one thing that I am kind of holding out for. Like if we see a ridiculous bear market of 40, 50, 60+%, it's going to be terrible. But in the recovery stage of maybe a 3 to 5 year recovery, maybe a 10-year recovery, if we ever get back to those highs again, you're talking about doubling or more than doubling your account. So whatever that investment is, if you have the ability to stay in these markets and survive these markets, this is how the wealthy get the wealthiest, is they add more liquidity in and around the nastiness of the markets. So to me, this resonates two ways. One is keep the drawdowns and risk under control. And two is never be afraid to average in on discounts. Because it's like the market likes to make you think like it can only go higher, 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 higher. And that's when everyone should get in is at all-time highs. I get it. right? All-time highs are usually followed by more all-time highs because it's right there. It just takes a little bit more momentum, a little bit more momentum. Everything looks good at all-time highs, and it's really bullish sentiment. But when it's ugly, that's when you get the biggest jumps in your gains. It takes time, it takes courage, but I would rather take an opportunity where I can make 50 to 100% of my money over a 3 to 5 year period, maybe 10-year period, versus every single day is like I got to buy this all-time high. As a trader, it feels like I'm just an idiot. You know, I think that's also why you look at something like, I mean, this has made big news this week. Michael Burry deregistered his hedge fund. Okay, there are plenty of hedge funds that will not make any money because we're talking about, like Michael Burry. What did the guy do? The guy called the Big Short during the Great Financial Crisis, but he's also. This is an interesting stat here. Check this out. This is some of the wild and crazy calls that he's had over the last like decade. Um, and look, I think Michael Burry, brilliant guy. I think that probably brilliant on like the spectrum where he's if you saw that portrayed in the movie, it's like he didn't know how to like read somebody's face or he was trying to be nice to the guy, and it's like just something about him like social norms and social skills just weren't there. But when it comes to the numbers, when it comes to the data, things made sense to him. He made a lot of money. I shared two things. There's a podcast that were the guys that were in the office of Steve Baum. Okay, so it was Porter and Vinny, the two guys in the movie that were in like Steve Carell's office. That's Mike Baum. Um, anyway, they were on a podcast and they talked about how many other offices they knew of during the Great Financial Crisis that they were short. Like people were short in 04, 05, 06, but they went bankrupt. They called the housing bubble, but they were too early and too leveraged and they didn't survive. So it's the movie's it's one of my favorite movies. I love that movie, but it just made me realize like, okay, that's an all-in trade and you were rewarded. But if that's your plan is to go all in on something, it can be a little dicey. It gets a little dicey. Okay. All right. So let me find this because there was some crazy stats here. Let me find it. Some of the stuff that he's called over the years. Yep, here we go. Okay. So January 2017. Okay, remember, we did the Great Financial Crisis. Michael Burry was right. These are some other things that he's called. January 2017, global financial collapse and World War III is imminent. That didn't happen. September 2019, claimed that index funds were the next CDO, like the collateralized debt obligation, which is what 2008 was all about, ready to implode like 2008. That was in September 2019. Didn't happen. December 2020, shorted Tesla, said the price was ridiculous and destined to crash. Okay, Tesla's made all-time highs since then. January 2021, Tesla's valuation would implode soon. Shares kept doubling. Late 2021, argued that GameStop's rally wouldn't repeat. It exploded weeks later. February 2021 warned the entire stock market was dancing on a knife's edge. Claimed inflation would destroy Bitcoin. It went higher that year. Called Robinhood a dangerous casino. It's up almost 1,000 times since he called that. So that's 10x. Said Bitcoin is a speculative bubble. It kept rallying. In June 2021, predicted mother of all crashes. Markets up 56% since then. September 2022, massive stock failures. Bull market started and bet 1.6 billion on market crash. Tweeted sell, and then later said I was wrong because the market's up 63% since he said to sell. So don't hate on Michael Burry. The guy is super smart. He's made a ton of money. He's probably wealthier than you and I will ever be. Okay, but something about this market hasn't been making sense to him. And I'm sure that's like some other old school traders where it's like stuff just doesn't make sense. That goes back to the 1930s saying the markets can remain irrational longer than traders can remain solvent. That also is a very, like, that's a truism. That's a proverb, whatever. But it holds very, very true because sometimes this market doesn't make a lot of sense. When you're like, how is it possible that one company like NVIDIA can keep this market magnetically going higher? How is it that 7 companies can keep this market going higher? Well, it has, and it's been carrying us for over a decade, right? And then you throw fiscal policy on top of that. You throw monetary policy on top of that. I mean, it's been argued like we're in the house of cards because it's all about the Mag 7 right now. And eventually there's going to be a rotation away from it. And that's going to be unpleasant. So anyway, that's a lot of talking today. Let me see. Any questions? I'm bringing the chat back up. Archive for Tuesday's waterfall class. It should be in your classroom, Scott. If you go into masterclass and trainings, it should be there. Yeah, I mean, we're at 67.24. We've got the thing it's 45 or 50, right? At 40? Okay. I mean, give it a chance. The day isn't done. Market makers had like a plus or minus 45 in the day. We've already gone up around 63 points. Okay. Look, I'm not saying, listen to me. I'm not saying that the day can't have two wild and crazy days in a row. But yesterday was crazy down. Is today going to be crazy up? I don't know. But I'm going to give it a chance because from the market maker's standpoint in the morning, it was a plus or minus 40 or 45. It's already moved up 60 points. I'm hoping that they will do a better job of containing price. So the goal for today is, yes, if price is up above this blue line, I'm taking on risk for daily profit play, right? But if price is going to go up 60 points, stall, and then come back down at all and recenter our trades in profit. Okay. So I get it. Let's see what happens. And if you don't like the trade, then take a dollar loss and get out of the trade. You know, if you don't like it, take it off. You can lose $100 today and not feel bad. But I'm going to give it a chance. I mean, yes, my call side has been threatened. I mean, there's no major news today. We didn't have any U.S. news. Everything's been taken off the calendar. Um, I'm a bit surprised to see the market makers getting this loose with price, unless they were so busted up yesterday that they're just hedging like crazy today. Okay. What is annoying is watching my freaking double up trade that came right back into profit. That's what's annoying. Okay. Even though I think there's just a lot of volatility. This trades up about $80 to $90 now. I thought this would be way better. We're literally at the pin price here. I thought this would be up a couple bucks, but this is still all day to go for expiration. So anyway, if you're in the double up trade, take your 80, $90 and move on. That's nearly 100% return on risk. So we'll see what the rest of the day looks like. Look, I'm not going to overtrade today. Okay. If you want to get courageous and, try to like, oh, I'll sell some puts down here. I'll sell. I mean, you can do whatever you want. I think it's silly to take on some of the risk. We're seeing the VIX get smashed from 23 down to 20, but I shouldn't see like ridiculous upside. And if I do see ridiculous upside, like I'll still fade it. I mean, I'm not going to call this top because I said, well, from the low here with the 23 VIX, that might be in the way. So I'm going to be conservative by taking the close yesterday and then going up my VIX box versus taking the price action today and saying that that's got to be the top, because it doesn't. It doesn't have to be the top. The best way, the safest way that I've called tops and bottoms intraday is if we have a higher VIX and we gap lower, you take the gap and the VIX. Okay. If we gap higher, you take the gap and the VIX. That is the safest top and the safest bottom. If prices are gapping, you take the gap plus the VIX to the upside, the gap plus the VIX to the downside. Okay. So this trade here at 68.30, I do have a broken wing butterfly there. I don't think it's going to get filled, but I'm curious, like above this level, I don't know. Can I get like a 30, 40? I mean, maybe. Let me see. This would be up in the 68s. So it'd be way up here. So there's my butterfly that is working for $1. It's only offering 5 cents. So that's pretty much garbage. If I sprinkled in, there's my sell put. I mean, a 10 wide spread's only offering 15 cents. It's so far out of the money. I'm not going to take this trade for like less than $1. So, all right, we're at 37. So we're threatening the daily profit play. The day isn't done. And I'm not in control of this stuff. What I'm banking on is, do we have the probability that market makers are not going to let the days go like 2 days in a row being wild and crazy movement? So if yesterday was crazy downside and excessive downside, are they going to let today be excessive upside? Possibly. It's like I can't control that crap. But if we have a price action look today that comes back to, find the gap and then it starts to stall from here, okay, fine. Let me look at this on the higher time frame. Let me go. I think I've got a trend line drawn right here. I mean, it's just volatile, man. That's all I can say. Because at the backside of this trend line, the market didn't care. The backside of the trend line, the market did care. We come back. We didn't take out this low. We didn't take out this low. All we did is came back and tested the 50-day again. Clearly, there's some interest to buy there. Here's my real-time gamma. We're at 41. I mean, if we are going to have a 26, I mean, we had a 90-point day to the downside yesterday, and we were talking about a open at 72. We're up 70 points from the open today. That's almost double what the market maker move was. Okay, like it's just volatile. But how do I play defense today? Well, if I wanted to play defense cheaply, if I'm threatened above the 67.50 zone like this, I mean, this is screaming here like 50 to 60 gamma. Do we hit the positive negative gamma pivot around 60? It's like maybe. Doesn't seem like it wants to stop, does it? So look, here's the deal. If I'm down $1.70 right now, I could just take the loss and walk away and be like, yep, shitty day. I'll take the loss and I'll manage it. Okay. So you're not going to hurt my feelings if you take a partial loss and you're down $150, $150, $175 on the day. Take the loss, we'll survive and go trade again. Our typical winners are 40, 50, $60. Sometimes we trade them to 75, $80. Give us a couple days, we'll make the money back. But if price at all today from this low to a high comes back and centers or gets below 67.40, we can still make money. Okay. So is it just a crazy high volatility day? Does it go up? I mean, look, the good thing is if it goes up, my entire portfolio is going to benefit from that. If I lose the daily profit play, okay, it's annoying for the day, but there are bigger things going with more juggling parts. But if we're less than 67.40, we're going to be fine. If you don't like the trade, take the small loss and get out, and we'll come back and do it again next week. I know VIX is down to 20. It was at 23 this morning. That's where we calculated it out. So we had a pretty high VIX this morning when we set up like our highs and lows. I would say just expect some volatility. I mean, if again, there's still a lot of trading left in the day, So if we are dead wrong, the most I can lose today is $400 on my daily profit play. If this market is, ripping out of the gates only to find time to then resettle, we're going to win and we'll be fine. Okay. So look, I'm not trying to do this to prove a point, but I am confident enough in the methodology that if we lose today, I would be a little surprised if we lose today. Okay. Now I did take the trade at 937. Okay. And so to be fair, 937 was shortly after this push to the downside, which would make it harder on that 5-minute recovery candle to, quickly shift prices from a, 10 delta call side to now what is pretty much trading at the money, like a 45 or 50 delta. That's a big shift in the day. To go from 10 delta to 50 delta is kind of crazy, but we're there. So what else can I do? Honestly, the only thing I can do now is play some defense and try not to take a bunch of unnecessary risk. So my defense would be, and this is going to cost money, but if I want to play defense, maybe put in a butterfly trade of some sort into this area, because obviously I'm wrong if price is above 67.45. That's where I'm wrong, right? 40 is my line in the sand. 45 is where I'm taking on full risk. So if I did like a 60, let me see what this looks like. I'll see what this looks like. So 60, we're trading at 67 right now. If I went up to like 67.60, so here, if I went 10 wide on the put side, 10 wide on the call, I mean, this is a tiny risk to play defense. I can make like $900 on this trade if I'm right and we come up into this profit zone. If I want to go a little bit higher, I can risk $195 to hedge. I think it's probably safer to do a small hedge. I'm going to do this. This trade is offering for like, this is crazy. If I get a 940 fill, I'm risking like $60 to make 900 plus. Let me see. I'll try to get this filled. 940 not filling. I'll go down 10 cents. As long as it's over $9, I'll take the trade. 930, 920. Is price retreating? A little bit, not really. 920, 915. I'm at the mid price, man. All right, 910. Let's see if we can hedge this thing out for you. Got filled at 910. Okay. So I am playing defense. Here's the deal. I added this in for daily profit play, similar to what I did yesterday. Okay. DPP defense trade. Okay. I'm adding a iron fly for defense today. You don't have to take this trade. It's totally optional, but it's only risking $90 to potentially make $910. So it's not a bad way to play defense. So I'm doing the 67.60 and I'm going 10 wide, 67.70 and 67.50. So that's a 910 credit filled. So 90 cents max risk, 910 max profit. Okay. Later in the day, is price within this area as a profit trap? It's only 4 strikes. It's only 4 strikes. It's only 4 contracts, Sean. So it's 60, 60, 70, 50. So it's 1, 2, 3, 4. Okay. But it's playing defense. So what happens on this trade is I'll show you. I'll just build the whole trade out for the day. Okay. Bear with me. Deanna, let's pass on the webinar today. I'll throw a couple questions out at the end. Okay. So here's the deal. Let me build this trade out. Let's see. So today's the 14th. I'm going to build out the Iron Condor and the Iron Fly. This is going to be kind of insane, but I'll build out a Iron Condor trade. And we have the, so we were putting something on the monitor. Let's go. Okay. 67.40. Get out of here. So 40 and 45 and 50 and 45. That was 65.50. It's way down here. 50 and 45. There. Okay. And I'm going to build in, add another sell call. This was at 67.60. Okay. Add a sell put at 67.60. Add a buy call at 70. And add a buy put at 50. There. Okay. So this is what I just built. All right. So this looks crazy. But I'm in my Iron Condor, which is right here. Okay. This offers me $1 of credit. Okay. This Iron Fly offers me $9.10 of credit. So I'm risking an extra $90 here versus a $4 risk here. Okay. So let's say that daily profit play on the day wins. Let's say that we're less than 67.40 and we're greater than 65.50. What does that give me on the day? That gives me $1. What do I lose on this trade? I lose 90 cents. I don't lose today. Right? Like if I get this right, I'll keep my full dollar. I'll lose my 90 cents. I walk away with a wash. After fees and everything, I'm going to pay, $4 or $5 in commissions. So I'll walk away with like $5. Better than losing. Okay. And the flip side is, let's say that price is in this profit trap. Well, if this profit trap offers me $1 or $2 or $300, I can wash away most of this risk. It may not be all of it, but if I can wash away most of it, that's not a bad result either. So now that I'm in this, my job is to manage the day. Okay. I can manage the trade individually, but now it's like they're together. I'm going to manage the day. If my net result is I make 5 or 10 cents, that's better than losing. If my result is that the profit trap at the end of the day can give me a little bit more profit here, like later in the day, if we're in that like sweet spot, this might actually offer us up some profit. So later today, like 3:30 p.m., 3:30, 3:45 today, can this thing give us some profit? Look at that butterfly. I mean, if we're in this profit trap, this is, I don't know, like $100 of profit on the, if it's inside the trap. If we're going late in the day, the final like 10 minutes or so, this thing gets a little ridiculous, but now all of a sudden I'm making, about the same as my risk. Most I'm risking here is, $400. So again, it's about managing the day. If I can make it, and there, I guess there is an ultimate weakness spot where if it closes between, I'm trying to think if it's from, I guess it's at 67.45 to 67.50. That is my absolute weakest spot. And the most I can lose today is $4.90. Does it suck? Sure. Am I blowing up my account? Absolutely not. Can I make this back next week? For sure. But the probability of this thing landing in a 5-point zone is pretty slim. Either we're going to retreat and give ourselves that dollar potential on the iron condor, or we get the iron fly trap at the end of the day. Is it possible that price goes beyond this? Sure. There's risk. Most likely loses 490. So I'm going to manage the day. So where are we at right now? We're at 67.37. This market is ripped right up to our 10 delta call side, and it's threatened. Doesn't mean we're going to lose. The day isn't done. If the market is going to go all day, maybe recenter, I'm going to try to hold this thing out since the put side's way down here. If we get $1 credit, I'm going to try to manage this for 5 cents or let it close at 0 at the end of the day. If it's below here and above here, I'll just let the trade close out for profit. Okay, I know that's a lot going on for a 0 DT trade, but that's my only option. If I want to try to manage the day, I have to do this. I have to have my core trade, and I've got to have maybe a plan B or defense trade. That's it. Could I be dead wrong on both? Yes. But if I'm dead wrong on both, it's still a manageable loss for the day. I'm not blowing my account up. Is that fair? All right. Do you need both trades? No, you can just risk your daily profit play and be done. Like if you're going to lose on daily profit play, you know what the risk is, accept it. And I keep going back to this. Look, if you don't like the trade, then get out. You're not taking a full loss right now. Your daily profit play right now is trading for $2.60. You could literally lose $150 and just be done. And like, oh, what a crazy day. The market's up, 90 points from a plus minus 45. It's obviously a pretty crazy day. So take the partial loss and move on. It's like, don't overthink it. But I will say this, from all the trades we have taken, somehow I wouldn't be surprised if the market is going to be less than this blue line and above this blue line, and somehow we are going to win the daily profit play today. And if we don't, hopefully my profit trap will help mitigate some of that risk. That's the plan. Okay. All right. Let me do one thing. So I wanted to ask, you did not take the iron fly. I did. Yeah, it's filled. It filled at 910. So I did the 6760, 6760. I went 10 wide. So I kind of played defense there. So here are the trades that I'm in. There's my dollar for iron condor daily profit play. There's my 910 for the iron fly defense. So if I win the day, I can walk away with a buck. I risk 90. I still make money. Is there a way to sweet spot manage this thing? Not really. Best trade, honestly, is either I get away for break even, I don't lose today, or I somehow get a big fat profit at the end of the day with my butterfly. That's probably as good as it gets. Yeah, it's in Telegram. Yeah, it's in Telegram. Posted at 10:54, so 8 minutes ago I posted that trade. Okay. So, I mean, now that I'm looking at these defense trades, it's like, where could price go? If I want to throw a net out there, this is for my double up traders, right? Is this a profit level? Sure. If we did like an iron fly or butterfly there, could it come up here into the, gamma levels in the fit? Sure. I mean, if you're throwing some butterflies out there, there's weakness in the middle, but it's like, if it's cheap enough and low risk enough, you could turn a net winner on the day, you know? So I just like, let price be price. I don't know what it's going to do today. But if I can not lose, that's better than, being at risk and being exposed and taking a loss on the day. But the day isn't done. It's in the daily profit play alerts, Rob. It's in for members. If you are a daily profit play alerts member, it's in your Telegram at 10:54. Okay. Let me do this. So I've been talking about waterfall income all week. We had a masterclass on Monday, Tuesday. Deanna, let me check one thing really quickly. Let me go one click trading. I want to see if our masterclasses have been posted. If they have been posted, I would ask anyone that's interested to, if you want to learn how to swing trade an index and do it consistently, we've had 104 winners, 104 winners in the last 111 trades. We're still winning 93.6% of our trades, live capital, live money for the last year. One of my favorite strategies to teach people how to get into options, dabble with options for the first time, and make some really good consistent income, week after week. So we just got a trade filled today. Trade number 124 was filled at 75 cents. That has also given us a pretty big buffer. We have a $1,000 profit trap, a $75 income trade, and we're 15+% away from current price. So I think there's a margin for error there. That expiration is out into February, which is a little bit longer. But, if we're going to roll over through November, December, I think we have some type of weird reflexive rally after like a, 5, 10, 50% dip anyway. Okay. So what I was going to say on the classroom is, let me see if those were posted. So we did 2 master classes this week. I want to see if they were posted. So membership, looking at waterfall income. So I'm in the classroom now. Go into your masterclass and live sessions. See if they were timestamped for this week. Yes. 10th, 11th. So this is a November 11th would have been masterclass.
I can double
Okay.
check if there's a second recording if you want.
There probably is a second one from the 10th. I think 55 minutes would be our 11:30 session for the trade.
Okay.
And then we would have done one at 1. I think I did it at 1 p.m. We came like right back and did a master class on Monday.
Okay. Should take me like 5 minutes
Just
to put
double
it in
check.
there if
Okay.
it's there. Yeah.
Okay, so strategy two is so we have a strategy one session that, and again, you can go back to any of these. Like here's a walkthrough. August 19th, that's a strategy one walkthrough. August 20th, strategy two. August 21st, combo, put them together. We took a live trade in that session. September 8th, strategy one. September 9th, strategy two. So anytime these are like 2-day workshops in the same week, the first one is a strategy one, the second one's a strategy two. So this week, I know that this one for 84 minutes was a strategy two. If we have another recording here that's going to be about 60 to 75 minutes or something like that, that'd be a strategy one. But I've taught this class a lot. I teach this class a lot. We always have new students coming in like every week or two. And it's one of my go-to strategies. All right. So I'm saying that because I asked this yesterday. I wanted to do a master class again today. We've already had strategy 1, 2 master classes this week. I want to ask if anybody join me this week. If any, I've got, whatever, how many people in today's room, like we usually have like 200 people today in my daily profit plan. How many of you join me for waterfall income this week? How many of you are in either my trading session or my master classes on Monday, Tuesday? Okay. Arthur says I was in both waterfall classes. Okay. Anybody else? Mark says yes. Bill says I did. Okay. So did we get the trade? Kent says yes. Okay. So did we get the trade that we had pending, that trade number 124? So when we did the Tuesday masterclass, I posted that trade and it was pending and today it got filled. Okay. So I do like that trade. That is in. I'll even build this trade out for you just for fun. So I'm going to save this one. This is let's go Friday DPP plus defense. See if this will let me save this. Okay. And then I want to build out the put side. We did a 220 expiration. And we have all puts here. 58.30. That's our, we're going to buy the 58.30. We're going to sell the 20. We're going to sell the 10 and buy the 90. There. So this is our trade. So we pulled in 75 cents and this is current price. So if price just goes nowhere, we're going to keep our 75 cents. If price goes up, we're going to keep our 75 cents. If price goes down up to 15%, we're still going to keep our 75 cents. If price gets into this profit trap near expiration, then we have a $1,000 profit trap plus the 75 cents. So I can make 1075, which is hard to do, but I can at least have a bonus trap there. And my max risk will be 925. Probability of profit on this trade, I will show you. This got filled. Let me see here. So working, filled. We have a 90% chance of profit on this trade from the get-go. And again, that's with a VIX at 22 or 23. So if the VIX, rallies again and gets up to 25 or 30, yeah, this is going to decrease the probability of profit a little bit. But if the VIX is naturally a reverting instrument, where like today we're going from 23 down to 20, if all of a sudden we see the VIX in the next, I don't know, I'm just throwing it out there. If we see the VIX next week coming back down into like 18 or 17, guess what that means for the indexes? They're probably going higher, which means that trade's going to look better and it's going to be further and further away and out of the money, and it'll look for a good profit trade. Yep. So anyway, it's just a trade, but I'm pretty happy we got filled on it, and it's quite a bit away. Yes. So the alerts goes in Telegram. It's in your classroom alerts. It's in email. It's in text message. So when those alerts and updates go out, it's all the typical channels you get them. Am I canceling the Iron Condor take profit? Yeah, I'm going to cancel the. Well, I'm going to cancel it because I'm going to try to neutralize the day. So that 50 cents that I put on, here's daily profit play. I'm down in the trade. I've got a pending order for 50 cents. I'm going to just replace this and go 0.05. I mean, I'll just let it expire. If I'm going to try to win the day, I'm just going to let it expire. So I'm going to go 0.05. Okay. So I'll take it down to 0.05. And if I just cancel the trade, then I no longer have a working take profit. So if you are in the daily profit play only, then just manage a break even or better. If this thing comes back to $1 less, take a break even on the day if you want to hang on to it. You know, what is very possible for the day is if we end up coming, if we're here for the day and we go back down at all, the daily profit will quickly offer profit. You know, you can probably grab 80, 70, 60, 50 cents very easily if price comes back down to center. Okay. If it keeps going higher and higher and higher for the day, well, I'm going to eventually take on full risk for my $4 here. And I'm going to look to see if I can get that butterfly trap to hopefully offer up a defense trade. So on the day, like I said, the defense trade is from here. It's from 80 to 60. I'm sorry, 70 to 70, my bad. So it's from 70 to 50. So I've got 70 is in here. So 70 and 50. That's my defense trade. So price is in here at all. So either we're up here for the day, we're going to go a little bit higher maybe, or fall back down. We have DPP for the full dollar. We have this trade for 90 cents risk. Okay, so 90 cents risk. This is my dollar profit. This is my $4 risk. This trade offers $910 as a profit. You know, is there a risk if price is too high? Yes. If there's risk right in the middle here for a 5-point area, yes. I would say if we had this day mapped out, you know, coming back down, getting full profit and daily profit play, I make $1, I lose 90 cents. I don't lose anything on the day. I make, 5 or 10 cents net profit. It's not saying it's a great day, but certainly better than a losing day. Okay. The flip side of that is, how ridiculously high do I need to go for today's price action? Well, we've already calculated out the 23 VIX. Okay. I don't know if we have that type of crazy upside risk, but I do have a broken wing butterfly way up here. If we are going ballistic to the upside, I still have a trade that might offer us a winner. So I did a 68, 25, 30 broken wing butterfly. I did 25, 30 by 40. That's pending for $1. It's trading for nothing right now. So working orders. Call fly. It's trading for 9 cents. 25, 30, 40. It's probably not going to get filled. Okay. But if it did get filled, there's another way to kind of help mitigate some of the risk. So best thing I can do today is lay it all out there. We're going to see how prices end up settling for the day. If I can win the day, awesome. A break-even day, totally fine. But I don't need to be super greedy. It's like, well, Chris, what about just above that butterfly? What if it goes up? Yeah, I know. All it means is I'm taking on more trades and taking on more risk. If price comes back down, the probability of coming down to 65.50 today is pretty darn slim. So I'd say the put side of our iron condor is totally safe. What we need to see happen is price needs to respect this level and hopefully just freaking drop a little bit. If we drop back to like 67.20 or 10, or I'm sorry, 67.20 or 6,700, our daily profit play is going to start offering profit right away. Okay. Another thing you could do is with the iron fly, it's a low risk trade. You're not going to experience the full 90-cent risk right away. So if you have profit here and you can wash this trade, again, fine. So like I said, it's now managing the day. I have one trade. I have two trades. I'm going to manage the day. That's the best I can do. If I want to add more trades, I'm going to do it up here at the top, which is already a planned high. Okay. And down here at the lows, like I'm not going to get greedy and say like, oh, I'm going to sell a bull put spread down here. Why? That could be in the way. We have no idea what price is going to do for the rest of the day. So I'm not going to be guessing, I'll take my core trade. I'll defend my tops, bottoms. In this case, I'm more like, well, maybe we have a crazy upside risk. But a butterfly spread would actually be pretty sweet because I get $1 profit that I think is pretty likely. And I'd also have potential profit trap for another $500. Maybe that helps. Okay. So here's how we know it's going to happen. Come back and join me this afternoon. The final hour, maybe it's 3 p.m. or 3:30 p.m. The final bit of market action today. I'll talk about it. You'll see me update in Telegram. But my goal is to try to just, manage the day. I'm not going to say win the day because it might be a break-even day. But if I can manage the day and have it realistic, whether it's a manageable loss or a net winner, I'm overall pretty happy with that. Okay. Okay. That's a lot of talking. So look, it's a pretty crazy day, like pretty fast paced, pretty crazy day. We've already exceeded almost double what the market maker move was on the day. We expected 45. It's up 90. That's a big move. So does it continue? Yeah, maybe. Maybe. If I've got some double up traders, the positive negative gamma pivots at 67.70. You want to throw a profit trap up at the 50%. That'd be a crazy day. But going from a 100% ATR to a 50% ATR, who knows? Who knows? I'm just not going to keep throwing trades out there and hoping. It's like, I've got a good plan. I'll stick to the plan, try to manage the day. I'm showing, this is interesting, by the way, I'm showing that the positive negative gamma pivot is at 67.55. Here's one thing that's going to be interesting. If we stay there, if we somehow stay here and this becomes like either one rejection point or two above it and then back to it, like guess what happens on that butterfly spread? That iron butterfly with a 55, if we close around 55, that's a $5 winner at the end of the day. So I could lose 400. I could lose 400 on daily profit play and still make 500 on the iron fly and still maybe net some profit on the day. So there's still a lot more to unfold, but I'm going to let you go from there. Question. Do I have anybody that, even if you're already a student of mine in waterfall income, does anybody want to jump into a class today at, we'll go like 2 p.m. today? Does anybody want to jump into a class at 2 p.m.? I don't think I have any other webinars. Let me see. Webinars. No, I was just going to do a video for Project Options Edge. Steve says yes. Kirk says yes. Venkat says yes. Jeff says sure. Craig says sure. Okay. Deanna, let's do it. Let's do it. Let's do a 2 p.m. Masterclass today. So we'll have another one. Okay. So we'll do a 2 p.m. 2 p.m. Eastern time masterclass. So we'll do a live trade review, and we'll also look at open positions. We'll look at POP for probability to profit, and we'll look at that since we filled the gap today. Like I was okay taking a trade. But if we were like down at today's lows, but since we've rallied 90 points off the lows today, I'm probably going to pass and just let the trade that got filled serve as our new open position. So that gives us 2 trades this week. So all right, we'll do that at 2 p.m. today. All waterfall income students are welcome. I'd like to see some new students in this week. Let's continue to also talk, strategy 1 and 2 Q&A. So if you're coming into class, bring some questions. Okay, bring some questions. Let's have a chat today. Okay. I wanted to ask you also, if you'd like to, depending on how large the student body is for that class, if you'd like to, feel free to use your camera and your microphone, and let's actually just open the class up to actually talk it out. I do a lot of like one-to-many, but this seems like a class where it's going to be our 3rd session for the week. I want to, answer some questions. So if you want to, open up the camera and the microphone, let's have a very intimate session at 2 p.m. Okay. All right. And then we'll go for about an hour, maybe a little bit longer, and then I'm going to switch over to YouTube and see how the day is going to close out. So I'll be watching prices for daily profit play. Sean says, on the iron fly, do you place a debit to close? Yes. So if you're in for 910 credit, you want to close it out at a lesser debit. So when you're managing the day, it's like, here's a good way for me to summarize the day. Okay. When I look at my positions, 1, 2, 3, 4, here's my iron fly. So this is iron fly, DPP defense. So right now my iron fly is up $10. Well, my daily profit play is down 188. So if I wanted to kind of manage the day and I want to close these trades out, if they're about break even, then I can manage the trades, right? If I've got the iron fly, and this is going to be later in the day. The most profit this iron fly is going to make is 9-10. That's going to be literally in the final, like maybe 15 to 20, probably the final 15 or 10 minutes of trading if we're like spot on. Okay. So we'll see. But I will do my best to, try to net the day out for a winner. If I can, great. If I can't, my max risk is 490 and I'll survive it. We'll come do it next week. We'll be fine. But a couple interesting levels. I mean, I've got a gamma at 60, which is my pin price. I have a positive negative gamma at 55. Sometimes it gets a little sticky with price action, which is totally good. And obviously the day isn't done yet. So is the market going to, somehow hit some levels and pull back? Well, market makers, remember, market makers had a plus 45 in the day. So from here, plus 45, if the market makers close us back within about 67.10 or so, they still did their job on the day. But that'd be a very volatile move. We'd have to drop another 30 to 50 points before the close, which it could. But we'll do our best to figure it out. Okay. All right. Waterfall income, 2:00. I will see you there. Sean says, what happens in the money? I can't buy shares. Can this be in the money? It's best to be closed versus letting it cash settle because there's so much sensitive price action at the end of the day. I don't love trying to let it cash settle at we have a 20 and then plus some points is where your bonus trap is in the final minutes of the day. So when I have the profits, like final minutes of the day, I usually take it because you never know where that final, like literally the last 1 minute of the day, the final 2 minutes of the day. The markets can move an easy 5-10 points one way or the other. So I try to manage those trades into the final like 30 minutes or so. Yep. David, how you join the 2 p.m. call? It should be inside your classroom for Waterfall Income. So Deanna can send out an alert. So we'll do like an alert with the Zoom link for Waterfall Income members. If you're not a Waterfall Income member, you'd like to be one, then jump into it's prosperitybub.com/windfall. You can check it on my website. Yeah, just drop the link. Okay, there you go. So if you want to be in the classroom today, there's the page for Waterfall Income. There are tons of bonuses in there. So if you're adding in a second or third year, you add lifetime. I've got a ton of bonus classes for you. I'm also giving you, if you are a lifetime member, I will give you my full practical options course. That's a $500 course that I sell. I built that for my nephews. I've given that to my 80-plus-year-old clients. So it's yours if you're a lifetime member. So I give this as a big foundational upgrade where I just want you to understand a little bit more about options and enjoy the process. Gil says, so to be clear, we hold on to the daily profit and wait to see how things play out this afternoon. Yes, that's what I'm going to do. You can do whatever you want. Right now, we are clearly above our call side on the daily profit play. Okay, daily profit play is down about $2. Okay, I'm down $235. If I wanted to take a partial loss, I can take a partial loss and not take $400 of risk, but I'll close it out right now. Okay, but what I'm going to do is I'm playing a little defense here with an iron fly. I also have a broken wing that is pending. Where the heck did it go? There it is. It's only trading for 5 cents. It's so far up there, like it's unlikely going to get filled. But honestly, who the hell knows? If this thing just keeps freaking going up, like we might get a 50 cents to a dollar credit on that broken wing. But what I'm going to be watching for is price going to go literally straight up for the entire day? Okay. From the open, around 70 or so. 73, it's already up 90 points on the day. Again, anything can happen. But if price pulls back to under 40, we are profitable on daily profit play for a full dollar. And what I'm going to do is let that ride, because if I'm wrong on the daily profit play, I'm going to try to play some defense right here for an iron fly winner. I have that broken wing that is a 68, 25, and 30, way up here. I mean, I would be, I mean, I'm just going to throw it out there. It would be knuckin' futs if we go from a 100% ATR to a 100% ATR for the day. But you can't be surprised because this market does all sorts of wild, crazy stuff, especially on days like this, where it's like, oh my God, we're opening up 1% lower and the market's just ripping on that gap lower. So I'm going to let it settle. If you want to come back and join me this afternoon from 3:15, 3:30 into the close, I'll tell you exactly where I'm at for the day. Win or lose. I don't want to lose. I want to defend. I want to have at least some type of management here. But I don't know. Like this is it's hard to think like, is this market going to stop going up? But I don't need to throw a bunch of trades and hope. I've got a pretty good plan. So we'll see what happens. Okay. All right. What else? This might be cheap enough. Let me see something here. I don't know if it's necessary. I think it's kind of throwing a trade away, but if it's super small risk, it might be something to consider. 68, 68. I've got the butterfly at 25. Yeah, that's a little bit more risk. I mean, there's another small risk trade on the day. Now, if I do this, I'm throwing out an extra trade, and I mean, it's super small risk. But if we get up to like six, I mean, and this is a big guess, are we getting up to 6,800 today? The question is, if we get there, that's one thing. Do we stay there? That's totally different. Okay. What did I say today's high was? And look, you can quote me on this. I think that today's high, 68.30, is going to be very, very difficult to get to. Because when we started this day out, it was at a 23 VIX. I calculated it out from the gap with a 23 VIX. So 1.4% from the close yesterday. That's 1.37. Okay. Maybe we can test it. I mean, there's no, I mean, we've already exceeded the gap. So now it's like, all right, well, where's resistance? I have no clue. This market is now in no man's land. We hit the 100% ATR. I mean, hell, it might find a way to settle in between the 50s. It might find a way to hit the 100 and then settle back. I don't know. But I'm not going to sit here and guess and throw a bunch of trades in. Look, I've got a daily profit play at 40. Okay. And all the way down here to 65.50. That's my daily profit play. I have an iron fly that is from 50 to 70. So an iron fly in here. I have a broken wing from 25 to 30 up here. Okay. So easy trade is this is not filled yet. This is not filled yet. So this is pending. This butterfly is pending. Okay. This one is filled, 90-cent risk. This one is $4 risk. If price is below this, I make $100. I lose 90. It's not filled. If price is in here, I might get filled in this pending order, and keep an eye on that for the end of the day. All I can do is offer, come join me this afternoon, and I will tell you where everything is and cash settles. I'm hoping that it's a manageable day. If we win, awesome. If we lose a little bit, totally fine. If it's worst case scenario, I'll survive. But the day isn't done. There's a lot of trading left. Okay. All right. Broke wings here. I did a pending. I'll put it in the Zoom chat. So pending order. It's the SPX 1114 expiration. 6825, 6830, and 6840 for $1 credit. That's the trade. So that's me playing defense. Okay. VIX has gone from a 2304, so 2304, 1.44%. From the open today, 1 point. I mean, that's way the fudge up here for an opening. I mean, that's crazy. But like I said, to be the most conservative, take the close from yesterday and go your 1.4. Now we're talking like 68.31. Well, if I have a pin price at 30, that's a $400 profit trap if I'm right. If it stays there for the day. But if we drop another 20 points, we're below, 67.40. Daily profit play trade is still in play today. All this is in play for profit. I have a profit trap here to hopefully mitigate some of that risk. And then Broken Wing is like, holy crap, I can't believe what this market did, but maybe we get lucky on another fill at the top. Okay. All right. I think we covered all the bases today. Waterfall income, 2 p.m. I'll see you then. Final hour, whether it's 3:15, 3:30, be with me for the final hour of the day. We'll jump on YouTube and I'll post that in Telegram and we'll jump in and see where the day settles. All right. Let's try to win the day. All right. See ya. Bye.